on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. And my goodness, do we have so much to go over today. This usually happens when I take one day off. Lots of things come out. There is so much we need to go over right now as people continue to panic over the fact that Bitcoin is in fact still sitting below this major resistance right here, guys. So obviously, this was holding us as support right here. And now that this support has actually flipped into resistance, there is becoming some worry in the space. Now, if we have a look at what we're doing, we're really still just trading in no man's land, but there is something we need to talk about today. Now, if you've had a look at what's been happening with the exchange volume lately, you'll actually notice that some of these Bitcoin investment products specifically, right, have actually fallen in volume around 16%. Now, you would say that this is bad. This means that people are losing interest in crypto and Bitcoin specifically. Well, you need to read between the lines because there's actually something incredibly important hidden within the data that we need to pay attention to. That's what I want to talk about today, because there was one particular market analyst you might be familiar with who is sort of talking about this total annihilation or death of the Bitcoin network that could essentially send the intrinsic value to zero, right? Pretty intense words. Well, I'm actually going to tell you why that is a ridiculous argument, and I'm going to show you why Bitcoin's network and value are going to continue to grow over time. And on top of that, there has been a slew of bullish news, bullish developments that have come out, and there are two specific catalysts for Bitcoin that literally will send the price of Bitcoin potentially even to $1 million. Like literally, guys, you're going to want to stick around for that. And I'm going to talk about the most important thing that we need to be paying attention to right now. Obviously, of course, we're going to go over the short-term price action. We are still holding this support right here. So lots of interesting opportunities approaching. If you are a trader, you're going to want to get subscribed because we could be setting up for some really awesome trade setups, which I'll go into. I've been going into them, but that being said, guys, stick around to the end of this video. You don't want to leave on this one. We are going to go rapid fire. Lots of video clips I want to show you. I want to show you a specific video clip as well. If all that sounds good to you, you know what to do. If you're not subscribed, definitely get subscribed at this point, guys, because we are entering the point of the market where this is truly where the money is made. All the people trying to buy the all-time highs, buying when Bitcoin's at 50, 60, 70, now it's down. They're sad. They've left. You're still here. I'm still here. We are going to be the ones who benefit from this, and we're going to get into exactly why right now. So having a look right here, as I did point out, I'd already talked about this, but I just want to recap. We did have a lot of support down here. You can see support, 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 support. And as soon as we broke this, what happened, guys? It's now acting as the resistance. So you could see Bitcoin needs to at least minimally get back over that $40,000 level, preferably around $41,000 for us to get back in this uptrend. Now, even though we are still putting in higher lows, if we do continue to trend downwards, there is that potential of a lower low for Bitcoin, right? Ultimately, though, we're still just trading in this no man's land. Like I said, you want to break out of this blue zone up here or break to the downside. If you don't do either of those, we're just trading sideways, right? So it's really difficult to really be short-term bullish or short-term bearish when we're just trading in the neutral zone. One thing we can say, however, is that we did have this resistance coming down here, and you will notice that we're actually acting as support. And not only that, but these wicks that had supported us down here are also acting as support, sort of, making this X symbol right here. Now, I still anticipate the possibility, and I've been saying this for a while now, of this sort of fake out down here, right? Somewhere around this $35,000 level, potentially even down to this maybe $33,000 level, which I know sounds pretty crazy to think about right now, but I would anticipate we have a move, to the downside. We do have that volume, and personally, I still think that Bitcoin is going to make its way back up to this yellow level right here. And we have set our targets at around $44,600. You can see right here. The reason for that is because of all of this resistance that we had at these points right here, right here, right here. We still are in the upward sloping trend. We had a fake out. What did we have? Wick down to this level. So the bulls tried to defend it, right? And if we just extend this over here, you could see that there is still that possibility of this fake out to the downside. We get the volume and we try that move up to 44,000. Maybe we even hit 45,000, right? And it's at that point that I say we need to pay the maximum amount of attention to Bitcoin. Now, we are still in this giant ascending triangle, if you want to call it that. If you want to trim the beef off the top, the fat off the top and bottom, still kind of, could argue maybe we're in some giant type of flag. Now, I know traditionally flags usually go to the downside, but this is a move that's been going on for over a year and 4 months. I do believe that this is a massive accumulation zone, and if you still don't think that institutions are accumulating, if you honestly think that they're offloading their Bitcoin, that they're selling their Bitcoin, well, I got news for you. You're going to want to stick around because we have evidence that there are massive buy orders set up right around these levels, guys. These are those levels that these guys are salivating over. Could we see that fake out? Is it a possibility? Well, there is one glaring bit of danger that I brought up. Now, this doesn't mean that history has to report itself. The only thing is, I don't want to come on this channel and be totally bullish, although I am bullish long-term for Bitcoin. This is why I never sell my HODL position. I don't care if Bitcoin goes down to $10,000. Sounds crazy. I'm not selling my HODL position because I know the future value of Bitcoin, and I know that Bitcoin literally continues to just trend up and to the right virtually indefinitely. Why is it any different right now? Because we're living through it right now, because you're living through it. Maybe you bought Bitcoin at 60,000 and now it's sitting at 38. So you're scared? Not you guys, not the people that watch the Crypto Zombie channel, but when I say you, I mean the general public. Maybe there's somebody new watching the video today, but really you have the 600 daily or the 200 on the 3. Same exact level. And as I pointed out, this is a very important level to keep in mind because you could see once we get above it, it supports us, boom, parabolic rally. As soon as we start to get below it as resistance, we fall below it and we go into that bear trend. And every single time we've ever done that right here, right, we couldn't hold it, fell below it, boom, right? Same thing over here. Once we got back above it, right, bull run. Now what's happening right now? We are still above it. Right? Well, actually, no, technically, we're not above it as of the time of making this video, but we have held up above it for quite some time. So the point that I'm trying to make is you can see that there were these candles right here. So if we do stay below this level, history has said that you tend to see really big crashes when we fall below that level. That's all I'm saying. I'm not saying we're going to do it. I'm just saying keep your eyes on it. It is a bit of a warning, right? That is something that we need to pay attention to. Now, I'm going to start off with what people perceive to potentially be some negative news, and I'm going to show you guys why there actually is some hidden bullishness. Now, check this out. So the average daily trading volumes across different crypto investment products, okay, has fallen about 16.3% from March to April. So April is the 6th consecutive month. This is according to Crypto Compare. They have the chart. You can see it right here. That the recording in a decline in trading volumes. Overall, investment product trading volumes have fallen 71% since October of last year. So what does this mean? Well, according to the report, they say trading volumes on centralized exchanges have also weakened over the last 6 months, as quoted in our monthly exchange review. However, the decline in digital asset investment product volume is more severe, suggesting market participants have moved further away from these products in preference for more direct exposure to crypto assets. So we have been talking about this bullish catalyst, right? There's only about 2 real catalysts left. Number one, you could say more countries adopting it, but really things we haven't seen yet. We haven't seen the sovereign wealth funds really get involved yet. The billions and billions of dollars sitting over in the UAE, which is actually becoming a very actively pro-crypto place to be. That's why everybody's moving over there. And number 2, is the United States spot Bitcoin ETF, which is coming. And when it does come, you are going to see a flood of capital into Bitcoin. Maybe they're suppressing the price. Maybe that's why they don't want to buy right now. Maybe they're waiting for those lower levels. Don't forget, when we had the CME futures released at the all-time high, that gave them opportunities to short Bitcoin. But now they could get the opportunity to spot long Bitcoin if they were at lower levels, right? And think, if you go from 20 to 100, it's a lot better return than going 40 to 100, right? And when you're talking billions of dollars here, that's a pretty penny, right? So as for specific investment products, and stick with me because you're like, what's your point, K-Dub? I have a point. You stick with me. As for specific investment products, Grayscale's Bitcoin Trust GBTC has actually remained its position as the highest traded app. It dropped a little bit, but among ETFs, ETNs, ETC group, the BTCE product recorded the highest daily volumes in April, despite a drop of 21.4% to 16.4 million. A recent study, and this is the one we spoke about, found that 80% of institutional and 54% of retail investors believe that cryptocurrencies are an asset class that will eventually overtake traditional investment vehicles in the next decade. So, what is going on in the background? Let's have a look at this Glassnode data. You can see right here, according to this chart, beginning in October 2020, the percentage of transactions greater than 10 million, despite volume decreasing, has actually increased by 10%. That's interesting. According to Glassnode, this points to significant growth in value settlement by institutional side trading entities, custodians, and high net worth individuals. Using aggregate transaction volumes in conjunction with the network value transaction ratio, they believe that the current value of Bitcoin, realistically, fair value, if you want to call it that, although there is actually another indicator that's fair value, but according to this indicator, they say that their fair value of Bitcoin is anywhere between $32,500 and $36,100. So if you actually have a look at this, this means that even at the time I'm making this video, according to their fair value, Bitcoin is actually still trading a little bit higher than where it should be. So could these guys be waiting for that $32,000, $30,000 retest? Well, according to them, both the 28-day and the 90-day NFT models are starting to bottom out and potentially reverse, with the 28-day breaking above the 90-day, which has historically been a constructive medium to long-term signal. Now, they didn't say short-term. They didn't say we couldn't have turbulence. They didn't say we couldn't have a retest of 28,000 or something like that, right? That's not what they're saying. They're saying it's starting to bottom out. You're starting to see these big players come in. You're starting to see massive transactional volume of institutional interest increasing, although the overall space has actually fallen. And we do know that a lot of them are waiting on that potential spot Bitcoin ETF. And even though the DXY, has broken above its 5-year trend line, in fact, it's the highest it's been in 5 years, you have to take into consideration that this is not simply the dollar being compared to just commodities and assets. We're actually comparing this to all of the money in the world. The euro has fallen tremendously. We have seen lots of these fiat currencies in these, different countries, Japan as well, continuing their money printers. So they're continuing to go down the road of inflation, whereas the US is deciding we're going to sit back. We're not going to print any more dollars right now. So in comparison, you may say that this is the lesser of two evils, which also I just want to point out, this is starting to form a parabola. Okay, you can see this is starting to go parabolic, and well, we know historically how all parabolic trends end. They end in very hard corrections, but you have to consider the fact that if CPI is whatever the hell they're saying it is, 9.5%, 10%, it's probably closer to 20%, but they're lying through their teeth. Let's just go with 10%. That would mean that you would need to raise rates 10% just to break even. And by the way, guys, this is very simple explanation. It's a little more complicated than that. But really, if you wanted to combat inflation, you'd have to raise rates even higher than the current inflation rate. So really, when you have a look at this, what are we really looking at right now? Is the dollar truly getting stronger, or is it just not getting as weak as the rest of the fiat? That is the lens that you have to look through. And before we get to the whole proof about institutional buying, which I'm going to show you very specifically right now, I wanted to give a shout out, of course, to Benjamin Cohen. I'm sure you guys know who he is. He needs no introduction. And this had to be one of my favorite videos he put out. Bitcoin is the alternative, because you hear these guys talk about there is no alternative, right? TINA, T-I-N-A, there is no alternative. And they're saying that, where do you put your money? Obviously, stocks continue to go up in the long term. So even though you have these pullbacks, they complain that Bitcoin is too volatile, but he argues different. In fact, he took some of the major charts. Here's an example. Amazon, if you actually, not Amazon to dollars, you compare Amazon to Bitcoin, this is the chart. So would you rather hold Amazon or would you rather hold Bitcoin? Have a look at this chart right here. This is the Apple versus Bitcoin chart. Apple has still been doing quite great, right? They're not getting hit as hard as some of these other guys. Bitcoin would have still been, even at the peaks, where we did have pullbacks, even if you bought at this peak right here, for example, in 2013, you would still be up. And same thing goes for Facebook as well. And obviously Netflix. Netflix is obviously a little bit scary, a little bit worrisome. They had a little bit of a bad earnings report, and lots of people are leaving, whatever. But long story short, again, Bitcoin is the answer. Now, getting back to what I wanted to talk about, and guys, on this channel, I like to give shout outs. Some YouTubers, they don't want to mention other people. They want it only to be about them. Guys, it's a community. Get in the comments, get involved, drop some info down there. I love reading your comments. I love opposing views. I like things that go against my own beliefs. That's how you truly grow as a person, right? You have to be open-minded. And Data Dash, man, I love this video he put out. He talks, is Bitcoin really in a bear market? Now, getting back to these big purchases, these market participants, these buy orders, the market book, the order book specifically, check out what he had to say. Shout out to Nicholas Merton. I think this was an incredible observation that you guys should definitely also see.
Now, I want to bring your attention here again to the cumulative order book here. This is taking in the exchanges of Kraken, FTX, Coinbase Pro, Bitfinex, Bitstamp, deep liquidity on the order book here. And I want you to tell me if you notice anything different here. This is the amount of Bitcoin at given designated points on the order book here. You can see that we're trading around $39,550 the current market price. But as we go up here, these are individuals who are looking to sell their Bitcoin at a higher price. This is going to weigh down as resistance. Whereas down here, these are the bids on the order book. These are people looking to buy Bitcoin if market price were to drop down. If there was enough people looking to market order sell down at the existing best available price. Now, on the right-hand side, we can see the cumulative order book aggregate here, which is, as over time, expanding in both directions, growing. But do you notice anything different, significantly different, between the aggregate order book of the bids versus the asks? Not exactly, but it is nearly twice as big on the bid side versus the asks. A near 2-to-1 ratio between the two. This isn't just happening on one exchange like Coinbase or Binance, it's happening across the vast majority of exchanges. Folks, I can't emphasize it enough right now that what we're seeing here is a slow, steady, and quiet institutional handoff. Now, what do I mean by this? I effectively mean that we're seeing a changing of the guard right now. While whales are, in this case, selling their positions, not to mention as well, a lot of retail participants, a lot of people worried about the state of the market because it's not going up in absolutely parabolic fashion, what we're seeing here is that there are a lot of people hoping that through each of these sell-side events, it's going to be good enough to start stacking up some major positions on the order book. Great example of this, whereas you've got around 196 Bitcoin here being willing to be sold at the next major $10,000 interval behind 40K, right? Around $50,000. We can see here at $30,000, there's 356 Bitcoin worth of buy orders waiting to be filled at that range. If market price goes to that range. Very big difference here, right? Again, major difference here between the sell side pressure. Because if we clear through this kind of narrow window of time here on the order book, if we clear through this 132 Bitcoin here, really at the start here around this 40K range, if we clear through that, the sky's the limit. That's exactly what we've been seeing here in regards to market price. Every single time we see Bitcoin kind of clear through the short-term resistance range, within a matter of a day or two, Bitcoin's price just really starts to get up towards this range here where it's next to chartering this 50K range, right? We've done this many times here where we have these kind of breakouts in price because there just isn't the resistance on the asks. There are no major players that are looking to sell at those ranges. So it's not important just to focus on what market price is doing now. It is important to focus on where the liquidity is setting up, because those bids on the order book, those green, that green kind of mountain on the side of the chart, those are people who have cash on hand ready to buy Bitcoin. And all the while, the order book can change. It's important to watch it from time to time. There is a clear dynamic difference between the bids and the asks on the order book that is showing that there is a lot more silent optimism than silent fear in the market.
So funny how that also coincides with the fact that we are seeing the network value of Bitcoin should be currently around 32,000 to 36,000. Kind of makes you wonder, is that what they're waiting for? Because we have seen proof of that accumulation all of this time. So that is something I definitely wanted to just share with you. Now, now Arthur Hayes, he was the previous CEO of BitMEX, and he's been putting out some very interesting, he talked about the death loop or the death spiral, right? He put that out. Now he has another thing coming out where he's actually talking about Bitcoin and something that could essentially give the network no value. And he says that this is hodling. He says the problem is people hodling. Very confusing. Let's have a look at why he says this. So he notes that Bitcoin, unlike gold, needs to be used to have value since miners spend energy to maintain the Bitcoin network. To cover their costs, miners must receive payments in a token that is socially valuable. Therefore, Bitcoin must move, and movement between parties is the antithesis of hodl culture. HODL culture, taken to its FX maxima, would result in the complete destruction of Bitcoin. Once all the Bitcoin has been minted and miners no longer receive sufficient income from the network rewards in the form of newly minted Bitcoin, they must rely on transaction fees instead. If no Bitcoin changes hands because we all sit smug clutching our USB sticks, then there will be no hash power supporting the network. No network equals no value. Now, he's not wrong. He's not wrong, okay? But I beg to differ. By the time that actually comes, do you really think that hodling will be the main use case for Bitcoin? I don't know, my friends, because if you just have a simple look at when the last Bitcoin will be mined, currently we have only 2 million Bitcoin that will be left to mine. So we've already had 19 mined already. The majority has come out. So the last 2 million coins are going to take the longest, and experts are predicting, obviously it's not based on time, it's actually based on blocks, and they say 10 minutes, but I've seen some that go higher, and I've seen some that have even done in 6 minutes or 8 minutes. So it's just a rough sort of just like, a projection. They don't really know specifically, but they're saying by the year 2140 is when the final Bitcoin will be mined. Now, 2140, I mind you, from today, from 2022, is 118 years from now. Okay? Bitcoin has only existed for 13 years. Look at what Bitcoin has already achieved compared to all of these other charts in just 13 years and what it's done to the dollar. Yes, it's down a little bit right now, but we know long-term where Bitcoin is going. Logarithmically, we know that Bitcoin is going up and to the right. So if we were able to do this in just 13 years, looking at another 118 years out is like 9 times longer than we've already had Bitcoin. So if we repeat this Bitcoin cycle, everything that you see right here, if we repeat this 9 more times, okay? Yes, you are going to see your $1 million, maybe even $5 million Bitcoin, maybe even $10 million Bitcoin at that point. There is a very good chance that a lot of these fiat currencies that are currently in power right now, we know the majority of them don't last over 300 years, probably at that point, my friends, we will be actually denominating things in Bitcoin. It will be a unit of account, and we will be transacting in Bitcoin. We will have Lightning networks set up everywhere, maybe through, the stuff that Jack Mallers and Strike, came out with. And I'm not really concerned about what's going to happen in 120 years. I'm just saying, guys, take baby steps. Gold has been around for 5,000 years. Bitcoin's only been around for 13. Let's 10x the time that Bitcoin's been around. I highly doubt that that will be a problem, but it is something that I just wanted to bring up. He was kind of talking about that, but let's talk about some good news, guys, because there has been some insanely bullish news lately. First, we're going to start with Goldman Sachs. They've officially offered their first ever Bitcoin-backed loan in a major step for institutional adoption on Wall Street. A spokeswoman from Goldman told Bloomberg that the multinational investment bank had lent cash collateralized by Bitcoin owned by the borrower for the first time in Goldman Sachs history. Such a loan allows for Bitcoin holders to borrow fiat currency, such as the US dollar, by fronting up their Bitcoin as collateral. Now, Goldman is not alone in their foray into digital assets, with fellow Wall Street banks ramping up their movements as well. For example, on Wednesday, multi-trillion-dollar asset management firm BlackRock announced the launch of a blockchain-focused exchange-traded fund. Earlier this month, the firm also announced its involvement in a $400 million round in partnership with Circle, the principal operator of the USDC stablecoin. If that is not enough, guys, this also opens the door towards crypto-backed real estate. This also came out. In the same week, blockchain real estate platform Propi announced that customers are now able to put up their own digital assets as collateral for real estate projects made through Abra Borrow. I'm going to continue, but do you see where we're going here? What is the point in creating all of these different products? Bitcoin, 401ks, Bitcoin backed, Bitcoin backing real estate, having Goldman Sachs, having their first Bitcoin backed loan. What is the purpose in doing all this if Bitcoin is just a flash in the pan? Now, they say regardless of how the transactions are made, fiat, crypto, even NFTs, right? Maybe NFTs, we'll be paying with NFTs, right? It is still recorded onto the blockchain, which ultimately serves as both the legal and technical framework for all buyers of the transaction. So that is pretty amazing, guys. We saw the Central African Republic adopting it as the second country for Bitcoin legal tender. And now lawmakers in Panama have approved a bill that would regulate the use of Bitcoin and 8 other cryptocurrencies and approve their use for paying taxes in private transactions. So you had Gabriel Silva, a Panamanian lawmaker, who says that this will help Panama become a hub of innovation and technology in Latin America, arguing that the legislation will help create jobs and financial inclusion. So a copy of the draft bill that was shared by Silva said that citizens, banks, and legal entities in Panama would be permitted to use several cryptocurrencies as means of payment without limitations. Some of them include Bitcoin, Ethereum, XRP, Litecoin, Elrond, that was interesting, Stellar, IOTA, and Algorand. And they would be accepted as payments in both civil and commercial capacities as well. So they say the tokenization of precious metals and other goods would also be permitted, and Panama's adoption of the legislation would see it follow in the footsteps of El Salvador, Central African Republic, etc. The only thing is, in Panama, it won't be obligatory to accept crypto payments, meaning they won't be legal tender per se. So, essentially, and they say using cryptos will be optional for citizens. Same like it is right now, right? Like you could accept it, you don't have to. Whereas, in Central African Republic and El Salvador, if somebody comes to you and wants to pay with Bitcoin, you kind of have to accept that as legal tender, right? But wait, there's more. Earlier this week, Mayor Horacio Rodriguez Larreta of Buenos Aires, the capital of Argentina, announced that the city is on the verge of recognizing crypto as the medium that could be used for various financial transactions, including tax payments. Speaking on the development, the mayor noted that the effort aims to transform the capital city into a digital hub. On crypto payments, the mayor noted that the city's government does not intend to receive the crypto directly from residents. Instead, policies will be put into place to convert crypto to Argentine peso before the government receives it. That's fine. That's fine. I mean, you could do that with the Lightning Network too, right? You could actually send dollars, have it converted into Bitcoin, and then still get dollars or pesos or whatever you want on the other end. Or you could use Bitcoin and get dollars or dollars into Bitcoin, whatever you want to do, right? Nothing wrong with that. However you prefer. Gersham's Law, bad money drives out good, good money drives out bad. Same old song. Oh, and on top of that, guys, look at this little slither of information that just found its way into the news BTC. Cuba's central bank announced the issuance of licenses to virtual asset service companies. The license will be offered to Cuban and foreign people and organizations. Wow. That's a lot of bullish news, guys, for Bitcoin to be spiraling to its ultimate death, for Bitcoin to be going to zero, for the network to be ultimately setting itself up to have absolutely no value. And considering that I like to draw on charts and make an absolute mess of it, you can basically point out the fact that, ultimately, let me go back to the other chart. It's a lot easier to actually do it like that. Lost my train of thought here, guys. But ultimately, this is telling us that it's not going away. And, you're seeing things like, not even just compared to Bitcoin, but, Netflix fell 35%, 40% in a day, down 70%. 4 years of the market wiped completely off the market. Whereas, with Bitcoin, yeah, we're down, but we've only really wiped off the gains that we've had since November of last year. And Bitcoin is still performing better than some of these major stocks out there. So if it really truly was the ultimate risk-on asset and everyone was just running for the hills, why are we still putting in higher highs and higher lows on the macro? Okay, we haven't had one since this peak, but ultimately, if you look at this chart right here, this is absolutely crazy. And one thing I just want to point out, if I just take everything off, if you go back here, guys, and have a look, let me actually put the auto back on. This was the crazy run up that we had from the bottom right here where we hit the peak in June of 2019, right? Bitcoin was up at $13,800 and we crashed all the way down 72%. Essentially to around $3,800. Now imagine what it felt like to live through that. Well, guess what, guys? I lived through that. Not only did I live through that, I lived through two other crashes as well, with the biggest one being the 2017 crash where we fell over 80% for Bitcoin. In all of those instances, I held my HODL portfolio. I held my Bitcoin all the way up, all the way down, of course, accumulating more along the way, dollar cost averaging, highly recommended, and zooming out to today, this is not a log chart. This is a regular chart. This is what that looks like now. Look at this down here. Does this even matter in the grand scheme of things? And this right here that we're seeing, even if we do have a pullback, even if we do, let's say, go to 20,000, maybe Gareth Soloway is right, maybe we go to 10,000, who knows what's really going to happen? We're all just trying to make educated guesses, but having a look at this down here and having a look at this down here, you realize that eventually this is going to become this. So with that being said, guys, don't forget that we do have 6 days left for this $1,000 giveaway. All you got to do is sign up. That's it. Basically, you're entered in the giveaway. You know, there's a few simple things you need to do. Deposit $100. You also get 25 if you trade some volume over there. But that's about it for me. Take advantage of that. There's over $16,000 in bonuses below. If you use the links below, you do help support the channel, but also you get these rewards as well. And just getting back to MEXC, if you do use the link, you get 10% trading fee reduction for life, forever. Okay, so if you're tired of going on Uniswap and, you know, paying $50 to do transactions, well, you could do that. Also, Femex offers $10 a month flat rate, so that's a good offer as well. But if you are looking to trade, I definitely don't recommend using a regular account. Use a paper account. If you don't know what I'm talking about, make sure that you watch these videos popping up right here, right now. Until next time, stay crypto, and of course, peace out.